Today's highlights. SBF is back stirring things up, Bitcoin can't seem to go up or down, and a big shot is calling for Ethereum to hit $10,000 by the end of the year. Let's take a look at the on-chain data to see if it can actually support this. The US government is about to take action against Southeast Asian scam syndicates. The Prince Group has 127,000 people, and Bitcoin might be confiscated. It's Wednesday, October 15th, and this is the TV Chinese channel. Where is B-Chain? I'm Michael. Now let's look at the data summary from the past 24 hours in the crypto world. Over the past week, B-Chain has been like a house of cards. Why has SBF, the former founder of FTX, suddenly resurfaced? Out of nowhere, he posted on Getter saying that back in 2020 his thinking was quite left-leaning, but what happened? He ended up being schooled by the Biden administration and the SEC into becoming a centrist. He also hinted that he had funneled tens of millions of dollars to the Republican Party, and just as he was preparing to testify before Congress, he was arrested the night before. So according to SBF, this post was published by a friend on his behalf. Whether that's true or not is hard to say, but this bombshell has already exploded on Twitter. Will this financial scandal turn into a political power struggle? We'll keep following this story. Now, looking at the macro side, things are far from calm. The US Senate has once again fallen into chaos. The Republicans submitted a stopgap bill, but it failed to pass, so the risk of a government shutdown is rising again. Originally, they just wanted to hold out until November 21st with a temporary budget. But with both parties at each other's throats, they didn't even get through the door. On the White House side, though, there's still some hope. The director of the National Economic Council, Kevin Hassett, openly stated that Powell will definitely cut interest rates on October 30th. So on the macro side, it's a fiscal deadlock, plus the tariffs between China and the US, which means capital is jittery, and everyone is just holding onto their money, wondering what to buy. Fortunately, the US dollar index is still holding around 97.8, with safe haven trades heating up while risk trades are pulling back. That's why Bitcoin and Ethereum don't dare to make any big moves either. The current state is basically sideways trading, playing dead. ETF funds are pulling out slightly, and the market now feels like a diver holding their breath, neither rising nor falling, just waiting for a signal. What signal? A rate cut signal from the Federal Reserve. So, when the Fed makes a move, it will either trigger an explosion or directly inject liquidity. This round for Bitcoin has already evolved from faith-based buying to a liquidity-driven surge. What does that mean? Let's take a look at the on-chain data. If the NUP is a positive 0.52, what does that indicate? It means 97% of people holding Bitcoin are currently making a profit. Does this scenario sound familiar? In 2017 and 2021, the market went straight from optimism to overexcitement, just like this. So for short-term players, let's look at the STH, which now accounts for 44% of the realized market cap. This is a new record. In other words, the stage now belongs to the short-term players, with the whales taking over, while the long-term holders, those old hodlers, are just sitting in the audience watching the show. But this time, things are a bit different. What's different? No one's dumping anymore. ETFs are seeing inflows, stablecoins are expanding, and institutional buying is providing support. As a result, the market bottom is getting higher and more solid. In the past, it had to be propped up by faith. Now, it's backed by real money and institutions. So do you want to kick off the next round of new highs, the next mini bull market? You'll have to wait until the short-term capital retreats and long-term players come back in to lay the foundation again. Only then will the market show signs of a surge. So at this stage, there are more risks and bigger fluctuations, but the foundation is still very solid. This isn't a bubble, it's a happy dilemma. Let's look at Bitcoin again. Now it's really too smart for its own good, and as a result, it's become a bit dull. Let's take a look at the on-chain data. The liquidity pulse between exchanges, known as IFP, has been dropping all the way down. So what does this IFP do? Simply put, it's an indicator that measures the activity level of capital flows between exchanges. In other words, it can show whether the essential funds are actually moving. Right now, the IFP has dropped significantly, which means the arbitrage traders have disappeared, and the arbitrage bots have clocked out as well. This indicator is actually quite interesting. If the IFP rises, it means the price differences between exchanges are large, money is flowing quickly, and the market is lively and active. If it drops, it means money isn't moving, price differences can't be arbitraged away, and the market's blood circulation is starting to slow down. So up to now, as you can see, Bitcoin's price action has entered a kind of hibernation mode. It's incredibly stable. But don't panic, this isn't a crash. It's actually a highly efficient side effect. All the price differences have been smoothed out, arbitrage opportunities have been completely squeezed dry, and naturally, volatility has shrunk and basically disappeared. So right now, what do we have to be like? Like a sports car filled with gasoline, but the racetrack has disappeared. What are we waiting for? We're waiting for new capital to come in, for liquidity to return, or for some exchange to have a minor technical glitch. Then liquidity will naturally start surging again. Alright, please like this video and turn on the notification bell. I'll help you sort through the news in the Web3 world that's closest to making money, and you're also welcome to become a member. All the membership benefits are listed here. Just click to see what you'll get by joining. Now let's look at today's headline. After the recent Black Friday drop, the two old foxes of Wall Street are back making big promises. The first is Tom Lee, and the second is Arthur Hayes. In their latest talk show appearance, they said that Ethereum will rise to $10,000 by the end of the year. Right now, it's at $4,100. So you could say this hype is really uplifting, right? But it's not just empty talk. They're actually good at analyzing the macro picture. He said that with the Fed repeatedly cutting interest rates, hot money will quickly flow into risk assets. Meanwhile, Arthur Hayes is looking at on-chain data. He pointed out that DeFi yields keep hitting new highs, and both staking and gas fees are reaching new records. As a result, the amount of coins stored on exchanges has dropped by 25%. As soon as BlackRock's ETF gets approved, it'll just add fuel to the fire and the momentum will be unstoppable. But can these reasons really support Ethereum reaching 10,000? Will these two masters of hype end up being proven wrong by the end of the year? Let's discuss it together in the comments section.
CoinGlass data shows that since 2016, Ethereum's average Q4 increase is about 21.36%. If this trend continues, the year-end price could be around $5,000, close to analysts' conservative target of $6,500. Using the 200-week moving average as a benchmark, if Ethereum replicates the approximately 40% increase seen in 2021, the price could reach $12,200.
So I'm going to stay consistent. $250,000 Bitcoin, $10,000 ETH.
Yeah, but by year end, our target for Bitcoin is 200 to 250,000, and for Ethereum, somewhere between 10 and 12,000.
With risks persisting, the Fed paused rate hikes, but rate cut expectations are priced in. CME data shows an 82.5% probability of a 25 basis point rate cut in December. The US dollar index remains steady above 105, risk capital hasn't significantly flowed back, and spot Ethereum ETF approval is still delayed. The SEC has repeatedly postponed institutional entry. Meanwhile, the US, EU, and Hong Kong are accelerating the licensing and regulation of stablecoins and trading platforms, increasing short-term market uncertainty.
But to be fair, there are plenty of people shouting for 10,000 or 12,000, but we need to see if the on-chain data can support that. Last week's Black Friday saw 3 major liquidations for Ethereum, with a total of 18.9 across the entire network. Ethereum was definitely the main player in those 3 events, so when high leverage gets liquidated, the market gets smashed. Right now, on-chain activity, at least in terms of wallets, has not yet surpassed the previous cycle's peak. It's still 17% lower than the high point. So the number of active liquidity wallet addresses on Ethereum still hasn't returned to its peak. If Ethereum wants to break through its previous highs again, there are 3 things it needs to get right. The first is that technical upgrades can't be delayed any longer. Whether the EIP 4844 proposal can actually improve gas fees and performance still remains to be seen. Second, the staking yields across the entire Ethereum network need to be clearly approved by the SEC so that institutional money will be more willing to come in. Third, the global environment needs to ease up a bit. Interest rates in the US need to come down, and the dollar needs to weaken further for capital to flow back in. So right now, the market is like a conversation stretched to its limit by leverage. On one side is everyone's conviction, and on the other is the overall market risk. For the ETF to take off and reach new highs, it's not about talking big, but about showing real strength on-chain. Let's take another look at scams in Southeast Asia. Yesterday, the US Treasury suddenly announced that it would join forces with the UK Foreign Office to crack down hard on Southeast Asian scam syndicates, explicitly stating that their target is Southeast Asia, especially Cambodia's Prince Group. This gang is no small operation. They've been targeting Americans for a long time, scamming people in the US. In recent years, the amount Americans have lost to online scams has exceeded $16.6 billion, and in 2024 alone, at least $10 billion has been siphoned off. Compared to the previous year, a staggering 66% increase. The US and UK are disaster zones for this crime. After the two governments teamed up, they confiscated 127,000 bitcoins. This money's returned to investors is another story, but for the government, it's a huge win.
The US Treasury Department directly targeted Chen Jigao's Prince Group in Cambodia, sanctioning all 146 of its entities and preparing to confiscate approximately 127,000 bitcoins. At current market prices, that's worth about $15 billion. Keep in mind, this year alone, American citizens have lost over $16.6 billion to online investment scams. In 2024, Southeast Asian scams have already siphoned off at least $10 billion, a 66% increase over last year. The Prince Group is the main culprit behind all this.
So have you figured out the underlying reason why the Prince Group was targeted this time? It's exactly what Trump said. We want to add Bitcoin to our strategic reserves, and what's more, we won't spend a single cent of taxpayers' or Americans' money. We're going to stockpile Bitcoin. So this is how they stockpile Bitcoin, by confiscation and law enforcement. Once these 127,000 coins are seized, the US reserves will immediately surpass 320,000 coins. Some people say this is good news for the market, since these coins won't be sold in the short term. At least for the next 3 years of Trump's term, he won't sell a single coin he holds, which is basically like locking them up on chain. Honestly, reality is just too surreal. Retail investors try to hold through dollar cost averaging, but may not manage to keep their coins. Miners only get a tiny bit each day. Institutions rely on their holdings. And the US government, what do they rely on? They seize coins through auctions and confiscations, on one hand cracking down on crime, and on the other, conveniently stockpiling coins. They talk about world peace, but what they're really doing is quietly accumulating free coins. The biggest whale isn't on Wall Street, it's in Washington. Just how badly has the DAT sector crashed? The floor prices of many companies have been broken through. Can meme coins still create legends? Japan is aligning crypto tax rates with stocks and cracking down hard on insider trading. With 7.88 million Japanese users, can they really feel at ease now? Bitcoin's price is moving sideways at the moment. Let's take a look at how crypto-related stocks are actually doing. Honestly, calling it a total collapse wouldn't be an exaggeration. First, let's look at Michael's strategy. He's clearly holding 640,000 Bitcoin. But what about the stock price? Since July, it's dropped by about 30%. Japan's MicroStrategy, Metaplanet, just raised $1.4 billion in September, saying they were going to buy crypto. But after buying for just half a month, everything came to a halt because the stock price plummeted. Now, 75% of the company's market value is less than the value of the Bitcoin they're holding. So the whole digital asset reserve track, DAT, has now entered a stage of dark humor where the assets must rise, but the stocks fall. The market has finally realized that just hoarding coins isn't really a way to print money.
Volatility is not something to be afraid of. It's something that can be harnessed. So if you think of Bitcoin as a long-dated call option on the future of money, on a better form of money, there isn't a better input into creating value there than high volatility. And so that's something that I think we should understand, embrace, and not be afraid of.
TradingView data shows Metapennant's market cap fell below its net holding value for the first time. The MNAV index dropped to a record low of 0.99. The company's stock plummeted from $13 in June to $3.20, a 75% decrease. They last bought Bitcoin on September 30th, acquiring 5,268 coins. They now hold 30,800 Bitcoins, worth about $3.5 billion.
What's ironic is this. Previously, they'd raised capital to buy Bitcoin, pushing up its price, driving up stock, raising more capital, and buying even more Bitcoin. It was a double helix virtuous cycle. Now the real concern is falling into a situation where stock price drops, making it impossible to raise funds to buy Bitcoin. With no crypto market liquidity, Bitcoin's price could fall further, creating a vicious cycle. That's why everyone in the DAT sector worries about stepping on a landmine. At the year's start, it was hyped as the ultimate tool for indirect Bitcoin holding. So what happened? If ETFs see outflows and capital cools, the myth collapses faster than Bitcoin's price. Some call it a bubble burst, others a buying opportunity. Which do you think? One thing is certain, Bitcoin can still go up. But that doesn't necessarily mean altcoins will be able to win along with it. Now let's look at Japan. The biggest move Japan has made recently is lowering the 55% crypto tax, which had long been holding back the crypto industry, to 20%. They've also passed the Financial Instruments and Exchange Act, classifying cryptocurrencies as traditional financial assets and treating them equally, directly regulating them according to traditional financial standards. And what's even more interesting is, it seems that the stricter the regulations, the more active the market becomes. Over the past 5 years, as you know, the number of crypto users in Japan has quadrupled. Now, the total number of users has reached 7.88 million, which means crypto traders make up about 6.3% of Japan's entire population. And as the number of people and traders increases, issues like insider trading start to emerge. Previously, there weren't any targeted rules, but now Japan is moving to close this loophole regarding insider trading.
According to data from the Japan Virtual and Crypto Assets Exchange Association, JVCEA, as of September, the number of cryptocurrency accounts in Japan has exceeded 7.88 million. This is a surge of over 4 times compared to 1.9 million in 2020, reaching a penetration rate of 6.3% of the national population. Among these, investors aged 20 to 40 account for nearly 65%, making young people the main force behind this escapist frenzy.
Japan has also been a big derivatives market historically.
According to Nikkei Asia, Japan's Securities and Exchange Surveillance Commission, SESC, will investigate suspicious crypto transactions. They can impose fines based on profit from insider trading and, in serious cases, initiate criminal proceedings. Previously, the Financial Instruments and Exchange Act didn't cover crypto insider trading, and the self-regulatory Japan Virtual and Crypto Assets Exchange Association's monitoring system couldn't catch tricks, forcing stronger regulation. Now, the Financial Services Agency is using working groups to refine rules, and amendments will be submitted. Legislation is planned for 2026.
So what about insider trading in Japan right now? They refer to the insider trading rules for stocks, but here's the thing. For many crypto projects, it's hard to say who actually issued them, and a lot of people are anonymous. How do you determine who the issuer is or who counts as an insider? So when it comes to regulating insider trading in the crypto space, Japan still has some things to figure out. But speaking of Japan, I think there's one project, ADA, that everyone can take a look at. In my view, ADA is basically a Japanese Ponzi scheme, mainly characterized by the fact that there's no selling pressure. Many Japanese investors really put in large sums of money, and once they're in, they won't sell for 10 years. So, for Japanese investors, protecting them isn't just about raising awareness. The Japanese government also needs to come up with more concrete risk management strategies in order to build a stable ecosystem. However, if the crypto world becomes too stable, there won't be any more opportunities to make money. If the crypto market neither rises nor falls or just stays as steady as an old dog, would you still want to play in it? All right, let's look at the news update.
Gold has exploded again. Today, spot gold surged past $4,190 per ounce, setting a new all-time high. Since May, Tether has aggressively issued $600 million worth of gold-backed stablecoins, literally holding gold bars on-chain. Even the crypto world is chasing the gold rush. As for news about $21.7 billion leaving Binance, it's actually just an algorithm at work. He Yi explained it clearly. That's just the book value dropping because of coin price falling, not actual money leaving. When prices dip, the algorithm just counts it as an outflow. This system is just too dramatic. Russia has been seriously drained by miners this time. To save on taxes and electricity, all the miners have gone underground, but as a result, their electricity and water were confiscated, causing the country to lose millions of dollars a year. With billions of rubles missing from the books, this isn't just mining, it's digging a hole in the national budget. According to data leaked by CoinGlass, centralized exchanges have seen a frenzy of withdrawals this week, with Binance leading the retreat, $21.75 billion withdrawn in just 7 days. Is this just people moving funds around, or are they trying to avoid risk and disaster? Either way, this wave of capital migration has chilled the entire crypto space, and several warnings have been sounded for old-timers like Fan Lao Pao and Andro Crunchy, who launched that token SEAL 4 years ago. Have they been targeted by hackers? After 4 years of untouched code, something finally went wrong. Netizens are joking that even projects that have faded into obscurity can't escape being summoned back from the dead.
All right, do you all know about Jingyu Litang? The older we get, the more we come to understand one thing. We actually live for nothing in particular. We're no different from the ants on the ground, the trees by the roadside, the butterflies in the sky, or even the air itself and the dust in the wind. We're just here to consume a bit of matter, and in the end, we turn into another form of matter. Life is a dream. Death is the inevitable destination for all, sooner or later. The sooner you grasp this, the sooner you realize that 100 years from now, neither you nor I will be here. No matter how hard we struggle, we can't take anything with us. The world is full of empty joys, nothing you can truly calculate or hold on to. When you arrive, everyone is happy. When you leave, you go empty-handed. What truly belongs to you and me is every single moment we are alive. Tomorrow hasn't come yet. It's still far away. Yesterday is already gone. So, the entire meaning of life is in this cup of coffee right now. Right now, in this episode, are you happy? If you feel beautiful, happy, and blessed in this moment, then your whole life is beautiful and happy. So life is not about longing for the future. The future is not life. Don't complain. Don't shrink back. Keep loving whatever it is you love. That is the deepest respect for the meaning of your entire life. If you understood, feel free to give a like. Every day, I help you sort through all the big and small players in the Web3 world. We also hope that this kind of overview can give you an intuitive understanding when you enter Web3 and further support you in making some rational decisions. Here, we offer all membership benefits. We hope to work hard with everyone and gradually become wealthier. See you tomorrow.